Welcome back to the Everyday Heroes podcast, proudly sponsored by Kofkin Bond Co. Today's guest is a powerhouse in business and technology, Peter Gatt. Peter is a seasoned entrepreneur, tech executive, and the CEO and co-founder of Emanda, where he helps companies rethink growth, simplify mergers, and unlock strategic value. With a career spanning multiple startups and multiple successful business exits, Peter brings real-world experience in leadership, cloud innovation, digital transformation, and scaling businesses for success. Known for his honest reflections on the highs and lows of entrepreneurship and his passion for mentoring the next generation of founders, Peter bridges strategy with heart, helping others build companies that matter. Enjoy the podcast.
Peter, welcome to Everyday Heroes Kofkin Bond podcast. You know you're a hero of mine, especially at 2 a.m. when we're drinking beer somewhere in Sydney.
I love that's the first thing you've said straight off the bat. You too, Danny. That's
yeah,
great.
no, we're both trimmer versions of ourselves over the last few months. You especially. So it's but you know it was interesting because we've had a couple of failed attempts to get you on the podcast. We get along very well. We have ever since I met you 3 years ago. But it was probably 2 a.m. in Sydney a month or so ago, and you said, "When am I coming on board as a podcast guest?" And I said, "When we confirm it in the diary, you're here, mate." So welcome.
Thank
great
you.
to have you here.
Great to be on it.
Yeah, so it's interesting, you know, in having to do research on you for this podcast that actually wasn't required. So, I know you pretty well, but let's start for the listeners. You are a very, very successful entrepreneur. But your journey to here wasn't, you know, with a silver spoon in your mouth, going to the best schools, and things like that. So you grew up in a very rough part of town, being St Albans. But can you tell us about that, your upbringing and how that has shaped you to where you are today?
Yeah. And it always comes up a lot. So I grew up in St Albans, and my parents are still there. I've got my dad's Maltese, mum's background's Italian. My dad built the house with his hands, which also meant when he looked at the house, I said, "Will we ever move? We've got to move out of St Albans. It's not safe." Even to this day, he goes, I placed every brick in this house. There's not a single crack, except where the plumber did that. And I wasn't allowed to. Yeah, that's been his thing. And so they will never move. So they're still there in St Albans. And so we grew up there. It was during the primary school years, it wasn't too bad. It was a bit different back then. So in the kind of earlier 80s, and we went there. So St Albans East Primary was all really good. But it's really interesting. So I got a scholarship to go to high school, which is actually a thing, funny enough, which was more of a funding for books for the first year for going into high school, which ended up being Kava College, Kava College was extremely rough. When I say that, everyone sort of says, "Oh, was it really?" And the rest, I'm like, I've still got knife wounds on my back, quite literally. Friends I went to school with, double homicide, found people in the boot of their car, stole stuff like it. People go, "That's not a thing." I'm like, if there was a Bronx and, we'd compete, I think I'll say it as well. Like, there's Jan from Demente, also a Cub member, and Jan's actually Broadmeadows, similar upbringing, by the way. He starts talking about it, and I'm like, let's go. Anyway, so quite harsh upbringings. You've got the kind of,
pretty good kickboxer too.
Very handy kickboxer. I wouldn't get into an argument. He's good.
He's
more a legal one. But anyway.
No, he's a great guy. Yeah.
He's good. But same sort of thing, just like, it was rough at times. But the other thing I think it's really good about that is my parents always pushed at home, the education piece. It doesn't matter what you're doing at school. Like it's funny, my son's getting his, my wife said, "Oh, the books are out for his school year for grade 2 next year." We used to look forward to that because our school holidays over the summer break was know the whole books inside out before you start the next year level. So I go into every year of high school going, "I've done this and I'm going to sit in the class and give myself my own equations." I was a full nerd, like it was beyond belief. And I started doing computers at a much earlier age. So I started coding at like the age of 7, 8 years old. And I thought that was really impressive. But my son started at 6.5 and wrote his first code that went online at 6.5. So he's actually beat me. I'm like, let's keep this competition going.
We know as fathers, the only people we ever want to beat us is our children.
Yeah, that's true. And
better than us is actually our children. Yeah.
It's just always, it's sort of bad when people go, that thing that you say where you started coding at 7? Is it like, yeah, it hurts. It does hurt that he's now beating me at that, but I'm glad that he did. But it was really quite challenging. And I think definitely never had any money thing. I think I got my first pair of shoes. I paid for myself after working at KFC, and I did a paper round, the KFC. I kept the first check from the paper round. It was so small, I went, I might as well frame it because it was worth, it was $7.
When I was doing paper rounds, there were no checks. There was still cash. It was still $3.20 a week.
It's $7. So it was pretty good for it. Yeah, it was for the week.
Yeah, I'm a decade and a half on you, I reckon. So it's in age wise.
Wasn't as bad as it is today. Yeah, and then so it was hard, but I mean, and then I did get a scholarship to go to university as well. DOCSA cadetship program backed by Deutsche Bank back in the day. And the first person I had as my mentor then going into university, I was going to start in medicine, and I basically decided robots don't bleed, blood wasn't for me. So I went robotic engineering instead and did a master in artificial intelligence. But the guy from Deutsche Bank was the lawyer, and when I look back, it's so weird. He was the head of M&A for Deutsche Bank, with his background being really specific on his IT degree he'd done before. Oddly, I somehow fell through that exact same pattern over like the next 20 years from there. But I don't. To this day, though, I can't recall his name, and I've been trying to track it down even through emails. Don't go back that far from my old Yahoo account. I think it's destroyed. So I'd love to find it. But yeah, it was interesting upbringing. But it brought me into going into the university. And so I definitely have a lens of life different to a lot of others, which is no one's going to magically give you that thing.
Do you think?
Go get it.
Do you think that migrant background as well? Because I know out in St Albans used to be farmland.
Yeah.
But it was when I was a kid, I still remember playing football when I was at St Bernard's against St Albans. And they had the Melbourne Jumpers back then as well. But it was full of a bunch of kids from Maltese, Serbian or Croatian backgrounds.
Yeah, Maltese, Italian, Greek. Well, we had
that's right.
All of Europe was there.
Yeah, that's right. But it's do you think though that migrants' upbringing of you will have an education, you will work hard, and you are going to do paper rounds from a young age? You think that's really helped set you up to where you are today?
Yeah, it's interesting. I don't know that my so my parents never pushed me into you have this job. It was more of a if you don't, well, this is what you've got. And so it was my go, no, I want to get the money. The migrant thing I think is, and I think you see it all the time in terms of it, is that it's not so much they left out it was war torn when they came over. So my dad literally came over on the boat, and not the story of one shoe. So he had a real ticket and everything else and all the rest of it. But 6 weeks on the boat, they lost people to all kinds of disease in the boat, stuff like that. And when he got here, is more of the reason they left Malta, and even Mum's family, and the whole thing. And it's a long story behind that too. Is to get the better life here. So they didn't do that. And this is what was instilled in you. They never did that, and they didn't take those risks, and they didn't do that stuff for you to sit back and go, well, whatever. That was instilled in you of remember the sacrifice we made. And my parents never really said it. My grandparents did, but my parents never really said it. But that was the culture across the group, was that we've all got to make something of ourselves here. We're all going to grow up. It sounds bad to my wife, with the flowers that grew out of the pot of dirt. She's like, stop referring to it as that. I'm like, eh. So,
But it is that what my father used to allude to of breaking the cycle.
Yeah.
What they didn't have, they had a completely different mindset. My parents was, you will have an education, you will work hard, but from a young age, but you will end up being successful as a result. So, and what it taught me was the discipline through sport, discipline through going to school. If I had to get 75% to keep a part scholarship, I'll get 76.
Yeah.
Give me 90, I'd get 91.
Yeah.
So it's I just did enough to actually get by. But when it came to sport, I was 120% in everything, and actually I did. But it teaches you that discipline of what you actually have to do to achieve it. But I also think though that, and I look at yourself and people like yourself as well who have become very successful in life. And I say in life in broad terms of everything in life. But I've always said the people who will be most successful have usually come from some type of hardship.
Yeah, no, it's true. Like it's really bad in ways. I said to my wife, I go, do you really want them to get somewhere in life for the kids? She goes, yeah. I go, well, and it's really bad to say, it's because we don't, and we never will go, we've got to start beating them. We need to have some kind of problems at home. We need to sell the house. Like we should be living on the street. She's like, what are you? I'm like, well, if you want to come through adversity, I sort of think that, but I think
we do like have an easier life than our parents.
Yeah.
Who have had an easier life than their parents.
Exactly. Yeah.
And our children will have an easier life than us. But how much is teaching them for the real world, and how much is actually setting them up for the real world, or how much is actually, if we try to wrap them in cotton wool, they're just not going to enjoy the real world at all.
Yeah, and exactly this, because but the harder part, and without being sort of wanky towards it, is my kids will probably inherit whatever it is that I've got, and we more than, like you say, than my parents had,
Mm.
and there is that element of going,
You
as
can
much as a
afford to
hardship.
you can afford to pay for them to go to the good school.
Yeah, that's right. Actually, yeah,
Even if they do get a scholarship, you can still afford to actually pay for that
yeah,
if needs be. So, and you went to a school based on a scholarship, and you went to university. So, and that helped you where you were today. But it still came from that upbringing.
yeah. Oh, definitely did, absolutely. And I think the drive as well. I think it was always my mum behind the scenes. My dad was always working endless work, like 18-hour day work. He
You're lucky
started.
your life today.
Yeah, well, he
Except
actually
his was more physical.
Yeah, he actually started consumer affairs. So back in the day, he was actually secretary for consumer affairs
Well,
and
there you
started
go.
all that. So he went through that, and so he for a long time there was a whole bunch of all the articles he worked with the Queen's Council to put all the legislation and everything in place. And he would tell us every day, I'm like, when are we getting rid of all these? But when he retired, when are we getting rid of all these old things? Look, you got like that is my life's work. Like, and now we never understood it. Yeah.
Proud European man.
Yeah, and
Yeah.
now when I've sold companies, I've got those framed up on the walls of the thing, and they mean the world to me. And when someone goes to touch them, like, leave that there. Like, it's like,
Yeah.
oh, yeah, I understand that he was his life's work.
Yeah,
So
no,
yeah,
absolutely.
yeah,
It's it is interesting how as generations evolve, and so I look at things. I love history, especially history around business as well. But if you think of things like the Industrial Revolution, people say, oh, it caused people, with Carnegie, factories were open 364 days a year. They only closed Christmas Day, and they were going 24 hours a day during that period of time. There were two shifts, the morning shift and the evening shift, and you might be 2 weeks morning, 2 weeks evening. But at the same time, it actually brought prosperity and prosperity to that next generation, and then went on. Now, if you think of his childhood, was pretty damn rough.
yeah, yeah,
uh, you
yeah.
know, Henry Ford, not necessarily a fan of his politics as a person, but geez, a great industrialist. Westinghouse, great. He was the one who brought the 888 in,
Mm.
realistically, so work 8 hours, rest 8 hours, and actually have some holidays.
Yeah, yeah,
So is Sir Isaac Newton wasn't a fan, but but I suppose you have a look at all these things as it goes and how that's gone into prosperity, how that's gone into the tech boom that we went through, the early tech boom, and now it's the AI boom that we're actually going through as well, and it's just on the start of it.
yeah,
And it has been interesting if you have a look at those journeys that I was probably too young and a bit too naive to personally to participate in that tech boom.
yeah.
I'm not missing this one.
Yeah, well, and it's funny when you say that about the transfer over into into the AI one. The difference
Mm.
here in terms of, I could say, this revolution almost inside of it is, you everyone's saying, "Oh, what's different about it? We've had these before." I'm like, "No, the difference here is at the pace of this one. In some of the others, people had time, even though there was hardships, people lost their jobs. They had time to reskill. They had time to see what was going to come next. This one, there is no it is at such a pace. I look back at the systems we even have internally to our companies, yeah, that we had even 6 months ago. So much so, I turned around to Emily and our team, and I went, "We used to do that like manually, almost." She's like, "That's 6 months ago. You had to." Like, that's how fast it's moving. Like, within months, not even in years anymore. It's like, what are you doing in the next 3 months? Have you picked up on that new thing? So yeah, I don't know what the world brings in that space.
But
But yeah,
it's you go back to before the T Model Ford, before they, just basically the industrial line and getting them so many of them out on a daily basis, which made them affordable for everyone. Probably about a year and a half prior to that, there was a famous quote, and I'm not going to say who it was from because I'll probably muck it up, but
yep,
it was a famous quote was, "One day in Manhattan, I can imagine there'll be 3 to 5 of these cars on the road."
yeah,
You know, and it's just like, wow, did you get that one wrong? So it's
yeah.
it's just
Slightly
basically two,
underestimated.
maybe 3 or 4 years later,
Yeah, yeah,
But what that did was though the guy who the horse and buggy, he's going to lose his livelihood. No, he just became a taxi driver
yeah,
because he could actually afford to buy the car.
yeah, yeah. That's right. Yeah,
The car might have only been the same price as actually the horse.
yeah, yeah,
So it's probably not as reliable, but
yeah,
a bit faster.
yeah,
But these are all the things that change, and it's going to be the same in AI.
yeah, yeah.
So there is going to be new opportunities that will actually come from that as well. And let's talk about your entrepreneurial journey for those of you who don't know you, which might be 4 or 5 people. But that'll be about it. So it's you have successfully well, you were originally in a band. after the band, he successfully bass guitarist, I believe.
No, drummer.
Drummer.
And
Okay.
now that you say that, I'm like, the only thing that was worse than the drummer was the. No, I'm just kidding.
Actually, I agree with you there. I have a joke lined up for that. Yeah. So it's the bass guitarist is the guy who just fills in, wasn't it?
Yeah. Well, the other part I always have, like, everyone's like, "Oh, you're a musician." I'm like, "No, I said I was a drummer." So I'll insult myself.
Yes,
there.
I bang things.
Yeah.
So it's my dad played the side drums in the Royal Military Band.
There you go.
Yeah. So those tattoos, wearing the big busbies and the kilts and
Yeah.
all the rest of it. So, but it's that aside. So, but you have successfully built and exited 9 companies. 6 of them successfully, I believe.
No. So 6.
Yep.
I'm up to companies 7, 8, and 9 at the moment.
Yep.
With what? No, there's technically 10, which is us starting to set up our family office, which is importing olive oil of all things. And anyway, so there's literally tons of olive oil on a ship right now on its way here. So that'll be
like some Maltese and Italian blood.
It's actually the Greek side of the family.
It's the Greek side, is it?
It's my wife's husband's dad's family in Crete, and my wife's her surname is Christoforidis, and it's like it's the Greek side of the stuff that brought it to us.
Yep.
And then we're just turning it into a family office because of course that'll be great, and there'll be no arguments or fights. Anyway, no, but it was the 6 that have been exited. 4 were successful exits, and when I say that, one of those 4 was a break even, which I'd still say was successful. That didn't lose anything in it outside of time, which you can go look at. 2 of them were quite bad. One actually really was when I say this from a tax thing, was did not realize the tax liability when having to kill it off and finally do my taxes and shut it down. I reckon that really mentally affected me for a good 10 years after that, I reckon, of the first one. But because we didn't expect a $100,000 bit, I was much younger, and a $100,000 debt. And I'll say this in case they're watching as well, ATO people. The ATO was quite good about it, going, we're going to, as they would normally, they're like, we're wiping this part off, the interest part off, you just got to pay it. So they were quite good to get it tuned right down.
I've always found if you speak to the ATO, they're actually good.
They're trying
if you try to avoid them, they don't like that.
And what it did teach me, again, you always take from the bad stuff, it taught me, and that's why I always say, like, what piece of advice we give? I'm like, do your taxes. I'm like, just stay on top of it, just do all the regulatory things. And it's probably lends into what we do in Emanda now, and all the rest of it is, that stuff is always often boring. That's often time consuming. You never get time to work on the business. You're always in the business in the early stages. So the first 2 companies ended badly. One was for the tax, and the other one was from another business owner that sailed quite badly and lost friendships and other stuff over it. So those 2, there were 2 failures, but there were 4 good ones in there.
That's a question from your experience here. We are going to touch on Emanda because I'm actually very excited about Emanda on a personal level. But the entrepreneur's journey is that we have an idea, we have a product, we build something, we build a business, but you can't be head of HR, you can't be the legal person. You might have a general knowledge usually through pain that's been inflicted on you. So you know about tax now because you had pain inflicted on you. Boyana, who you were talking to earlier in the foyer, she's our CFO here, and we've worked together for 22 years. And she runs our accounts like a Swiss watch. Mm-hmm. It is, if this is the budget, it is done to the cent, to the point where I got called into her office once about a receipt I gave from Sydney trip, where, it was, she said, I've told you 100 times you can't claim alcohol on your food expense. It's an FBT event. And I said, I don't know what you're talking about. And she said, well, I've got your receipts, and you went out for dinner and you had a cocktail and you put it on the company card. I said, I can assure you I did not touch 1 drop of alcohol whilst I was away. I don't know why I'm trying to justify that, but I certainly didn't spend any alcohol on the company card. And because I know that because I actually didn't drink. She goes, well, here's the receipt. I said, sorry, I'm just reading that receipt. You think I had a rucola salad and a margarita cocktail?
Yeah.
It was a margarita pizza.
Yeah.
And Jamie, who was here at the time, thought that was hilarious. But that's how there is no trouble with our accounts with the tax office whatsoever. But it is a simple philosophy, and I think a lot of startup owners, women are far better at it than men, I must admit. But I think a lot of startup owners forget the fact that when you're in business, spending less than you earn is a really good thing. And secondly, not having a debt to the tax office is also a really good thing. And everything you earn is not yours.
Exactly. And I'm sure you see, we actually
burn rates are horrendous on some companies.
It's really one of the first things like an accountant or a VCFO goes, and I find it a very, not so much funny, but interesting question. Like, are you making more than you spend? And everyone would think, when you think about people like, obviously they have them problem, like, but often, especially in the current climate, they're not. There's often times where we'll get into business and review it with them and have a look at it and go, yeah, there's been a few we've had to say, we have a good relationship with the Romanes Kant, if you know
Yes.
the guys in there, and Manuel's
Manuel,
awesome.
he's a great guy.
And Manuel, and
Fantastic at what he does.
yeah, and there's been a number of times like, hey, Manuel, he's like, yeah, and they're obviously, sometimes it's sad, but often not. And I'll say this is that when I did the failure, I prefer someone to be aware. Like I always tell people, get your head out of the sand. It's very easy to do when you're a business owner. Just head out your sand, just face what it is and deal with it. Because when you don't, it gets way worse really quickly. So we do see it a lot. But you're right. Like even to this day, like my wife came into some of the first companies that were successful to clean them up. So my original business owner, Jimmy, and I, like my wife came in, she's like, okay. She's like, this, I get you guys are enjoying yourself. So that's fun. That's great. And also so much of the thing as well to put it back on the person. So just like we were talking before, anything with the alcohol and everything, like it gets moved to your personal stuff. And it's like, you just got to add salary, you pay tax on it, like you do it correctly. It's not company stuff. So there you go. That's what I'm saying. And I have to do that as well. I'm like, that's pushing this, but it's just how it is. But so that sorts of things. But we are even inside of our own company, we kind of always try to make sure it gets preached then onto the clients is the cash flow analysis sort of side of things. It's done weekly. Yep. Like at an earlier stage, you need to look at it at that level. As you get further on, you do have someone like a CFO looking at it, but it is very much it can turn to kind of monthly, and eventually you're doing budgetly at a quarterly level, and eventually they've got discretion over the next year, of course. But in the earlier stages, people don't keep an eye on that cash flow. Cash is king. I mean, you have to in the early stages.
It's interesting. We had a look at a startup, which was an idea, and had a look at everyone has a J curve in their balance sheet on a Excel spreadsheet, of how this is going to take off and how this is going to go.
Yeah.
The good old hockey stick approach, so it's everyone's going to be the next Facebook, overnight.
Yeah.
But we had one that came in, and I said, you've got down here $350,000 in salaries in year one, but I only see one employee being you. Is that correct? And he was looking for a $1 million raise.
Yeah.
But of course he had the hockey stick. And I said, there's only one employee from what I understand being you right now.
Yeah.
And he said, that's right. And I said, so are you doing a raise to get paid a salary?
Yeah.
So it's
very common when you first talk to people around that space. That's exactly what they do. The other one we also like the hockey stick as well. The other one, I think just on that, it's actually an important part is that unfortunately we had this conversation with a lot of VCs in Queensland at an exit event that we ran.
Yeah.
And the VCs were saying it, like someone raised a question out of the audience going, so, is it true that you guys are going to ask us about having to prove we can make $150 million and all the rest of it? And I kind of interjected on behalf of one of the ladies from the VCs, and I actually said, okay, they will. Unfortunately, they are wired to have to do that because they've got, basically have the planning saying that they have to return the whole fund with $150 million. One of these has to pay off. Yeah, so that's what it is. But unfortunately, it also means that everyone cooks their books to show that curve, like in the actual thing, which is just often not reality. And so I've just been making this big argument for you know what, a $50 million company or someone exiting that would be really good. Do you know what? An exit at $10 million would be really good. The constant push from the VC to the 150 million, like show us that. We do help clients with it. We do the whole let's model and show you the 150 million. Like we'll do that. But it's definitely the hand wavy. Is that person excited and will they try their best to make this as worth the possible is the important part.
Yeah.
But it does kind of drive what you see come out of everyone's idea. But yeah, I do see the I would need to pay my salary from this one. I'm like, someone's not investing you to give you your salary.
That's exactly right. And it's it was Steve Bartlett talking about when he had his first VC from the diary of the CEO, and he had his first VC check. The first thing he did was, as a young, naive 22-year-old, was sign a 15-year lease on this huge office space in Manchester. He had 8 staff at the time, but he knew in his plan he was growing to 300 staff. So he signed a 15-year lease on a space that held for 300 people. He's still nowhere near 300 people. But he said it is so easy to do with other people's money.
Yeah, that's right. Yeah,
to get rid of that mindset. It's and that's what you and I both know this as business owners. We make a mistake, it comes out of our pocket. It's as simple as that. If you're the CEO of a listed company, you make a mistake, shareholders can get shitty, but it comes out of shareholders' dividends realistically because there's less dividends to pay. But it's, when you're running your own business, it's very painful to make those mistakes. But I was talking to a business owner who has a very good business in respect to turnover, an okay EBIT, okay for his business, but didn't have the cash flow to support that EBIT. And it's, even just to pay the tax. Now he's in a world of pain with the tax office right now. And I did say to him, because he said, maybe I'll just get an investor and sell some shares. And I said, so what?
Yeah.
I said, I hate to say this, but you've got an EBIT there, but you don't actually even have the cash flow into business to pay the tax on that EBIT.
Yeah.
So that means somebody's spending a lot more than they should be.
Yeah.
And, and I did say to him, if you halved your drawings out of this business right now, you would still be living on more than 99% of the people, and you'd be able to pay off the tax office with the other half, which is still a capital expense, but you'd actually be able to pay it off the tax office within 4 years.
Yeah.
And then have an absolutely clean balance sheet. Then you could actually sell part of the business. But if you're not willing to, because who's going to go and take over part of your business and give you a check?
Yeah.
Not going to happen.
I recently just had a chat with 2 different people came to me going, hey, I've been running this for a long time. I'm going to raise money. And you look at it, and it's because I had one of them got tapped on the shoulder about exiting, which is really good. As in, I had to look at that, and I went, why don't you want to do that? And hence the whole exit conversation. And again, sort of lying up to the conversation around Emanda is that they don't understand the value in it. And when I looked at it and they just explained it for 2 minutes, I went, there's no value in that. What do you mean? I'm like, you just explained the profitability. You just explained to me that you also, though, have these debts and a sitting at position. You're technically negative, which means 0. In your industry, that's what the multipliers on your profitability, that's where it is. And unfortunately, technically, there's an academic view, it's 0. They go, oh, well, this is worth nothing. I'm like, no, not necessarily. You have to have cleaner books and done. But then there are trade buyers, yeah? And in that trade sale, they're looking for something that isn't just your profitability. Often it could be you. Yeah, they might buy you. They might give you a job. And then all of a sudden it's like, oh, well, that would be good. And I'm like, good. And so go into conversation that way. But it's clean books are so important. I think a big part of what we see when we're telling people about the equation at the end, that's why I'm always passionate about the equation at the end now. It's become my whole life, is to show them, or at least tell them how to clean it up and how to improve that number at the end.
Yeah.
Because they're often in the middle or somewhere along the track, doesn't really matter where. And they've got a road. They've got a 2-year road at least. Yeah, they're looking at some are really good and ready to go. Sure, but most of the time there's about 5 things to clean up. Yeah.
Well, yeah.
So
it's, let's look at merging businesses. What are all these millions of dollars of Division 7A loans here?
Yeah.
Yeah, I don't think so.
Yeah.
So it's yeah. So.
And you do look. You clean it up. Some people are like, oh, do I have to wait 3
I
years?
don't have the cash to clean that up to do that.
Yeah.
I've spent it all.
Yeah.
No, so it's
yeah. We play this game. I run a thing called the exit panel. Should get you on actually at one point. It'll be good. An exit panel and events being run all up the East Coast, and one of the things that we always ask is one of the questions to the Big Four will often have a seat in it and everything else. And I'm like, what's the most interesting thing? What's the best skeleton you found? Yeah, I love that game. And then normally pretty
Can you
open.
give me some examples of stuff?
Yeah, the most one
without
was mentioning
mentioning companies' names.
no,
Obviously,
the most recent one was they found a old Apache helicopter in the company. Yeah, I'm like, that is great. Yeah, but
wow. Okay.
not even that. One that got given by
Are they an aeronautical company?
No.
Okay.
One of the best ones we found was a comic book store running in the company, and then the person went, oh yeah, I'll divest that out. I'm like, no, I think I do want to buy the guy. One of the buyers went, I'd actually take the comic books.
Yeah.
Okay, that's interesting because nerds in general.
Yeah.
But the one that was by far the best, and it wasn't necessarily something in the books, was one of the Big Four people who are on the panel. And she was letting us know that they'd acquired a company. Well, so they'd done the non-binding indicative offer. They were going through the process to take the company in. And about 2 months in, they were struggling to get any conversations with the CEO. Just could not get to the CEO. They're like, okay, so we have, sorry, but we're passing through due diligence. We need to have this chat with them. And eventually someone that was sitting there from the board went, well, it'll be really challenging because they're in prison. Yeah.
Wow.
And I said, so did that go well? They go, no, I believe the official line that came out afterwards was, we don't believe what he's done is in line with our values. And bills. I'm like, that would definitely, it's like, yep. So CEO in jail was totally something we found. I'm like, that probably tops it. That's pretty good. No. Well, apparently
Wow. Yeah. So I suppose that's not something you see on a balance sheet.
No, that's what I'm saying. So it's like, how do
Exactly.
you look for that one? Yeah.
Yeah. So the Apache helicopter, that's a good one.
Yeah, it's good.
Yeah.
Yeah.
So it's yeah, there are personal assets and non-personal assets. You shouldn't have the company buying. There's a guy who founded WeWorks.
Oh, yeah. Yeah.
Yeah. So
Yeah.
it's and his private jet. Off. Let's go and raise a bunch of money and buy a private jet,
Yeah.
but we're not making any money.
Yeah.
So
No.
it's interesting, but people get fast throwing money in. Let's talk about Amanda. Sounds like your mistress. We've mentioned her so many times.
Yeah. Yeah.
But first of all, the name.
Yeah. Yeah.
Yeah. So Emanda.
Yeah, yeah. So
So
people will pronounce it as M&A because so it came from that. I
yeah.
went, oh, M&A, and I'm really bad at normally name things with acronyms, so I got banned from it. So I'm not allowed to ban. So in all the companies I've run, like I'm banned from doing it. And often they just get straight onto the P can't name things. But then I wrote this down and I went, oh, what if we just did it phonetically of my acronym? They're like, oh my god, he's managed to do it. And it was Amanda came out. They're like, oh, it's actually okay. And then we also had Chris from K&L Gates do the piece for us. He goes, it's interesting. And I go, what? He goes, this is great. I love it. Why? He goes, because you can't trademark pronunciation. He goes, so you're not allowed to take out M&A, but you can take out Amanda and call yourself M&A. I'm like, this is, I wasn't even trying. so
Because,
took
well,
it
it is not M as in the letter M, it's EM.
EM, yeah. So
Yeah.
it's like, nope, it's EM and A. So that works well. I do cop it because Emily Grinton is one of my co-founders. One of our clients at the Christmas party last year came in and handed out stickers he'd made up saying M and Associates. I went, and he looked and he goes, that was just to upset you. And everyone, like, I'm like, high five to that. I go, but Em's looked at me, she goes, I had nothing to do with this. I'm like, that's
Yeah.
brilliant.
I had nothing to do with this.
Yeah, it's like, I still find those bumper stickers on chairs and stuff. Anyway.
Yeah, there's stickers on everyone's phones here,
Yeah.
WWTD. And so it just stands for what would Tony do?
Nice, that's good.
It was actually one of our ex-colleagues, Lucy, just put them on stop bugging him, and she just put those stickers on everyone's phones in our corporate colours.
Very
So
good.
what
I
would
like
Tony
that.
do? So it's
That's good.
yeah. So let's talk about Amanda. I mean, it really does. I'm excited about it. We're partnering with you on it as well. But it's when you first spoke to me about it, I thought this is good. When I looked at it again, just a month or so ago, it was just like, this is fantastic. And I told you, I spoke to Shay. Shay's always loved it and what you're doing in the projection. So we knew we were going to be there with you on the journey, but it was just a case of, I said, 90% of what we're looking for is actually done. And every time we speak to you, it seems to be like, oh, no, 100's done. We can do now more.
Yeah,
So
yeah.
let's do more. And then it goes back to 90. Oh, look, it can be done again. So it's, but
Yeah.
let's talk about M&A.
Yeah, okay.
And first of all, why did you build it?
Yeah, that's a good question. So, and even inside of the name, not just our own exits, I obviously started helping others and went into the boutique side of things, but just the entire mantra is people don't think about the end. And it's only when you get to the end that you go, oh, we should have done this at the beginning. It's a common thing in life.
Famous Mr. Gatt quote here. Thinking about the end at the beginning.
Yeah. Yeah, I should get that perfectly right each time I say it. Now, but anyway, it's a catchphrase. But
yeah,
but it is that, and where it starts though is when we say I've always had this stuff. It was actually on my LinkedIn for a long time, might still be there, which is continually trying to automate myself out of a job. And everyone goes, oh, so you won't have a job? I'm like, no, the jobs I don't want to do. Yeah. And with that kind of mantra, and I've done that through multiple products that I've gone on to build and sell in the tech space. And now in this area is we got into the business area, into this, into the M&A world and into the advisory world, and when everything around us was just very clunky. And so as we had to go build something to kind of replace those parts and try to automate things was working backwards through that is just having a conversation. Finally, we work backwards as in we know what we'd want to do at the end, which is get the company sold and all that sort of stuff. That's the end game or listed or whatever it might be.
Yeah.
But we bring that right at the beginning. When we start working with the client, funny enough, and probably not dissimilar to yourselves, the first thing you want to understand is for those founders and for those people, their business is often their greatest asset and have no clue what it's worth. They don't know where they're at. They don't know the line in the sand. They don't know where they're heading often. They're just like, I have a company. And sometimes it's great as in, I would like to pull this profit out of it each year. Thank you. And even if that is the case now and will be for the next 5 years, at some point someone tap on the shoulder and they're like, I should probably think about what this exit looks like. And so,
well, it's interesting you say that because I've often said to people, do you have a sellable asset or a company?
Yeah, that's right.
Yeah, because if you're the company, do you have a sellable asset?
Yeah.
Or so it's because there is a difference between that company and that sellable asset.
Yeah. No, that's good. And so what we did as the first part is I said, okay, what would we normally do with someone when we're getting ready for this? Step one, what they want to know what the worth and what the market's saying. So I went, I'm going to build a business valuation tool. It started there. And I think that's even where we started the conversation.
Yep.
So Emanda does that. So we conquered that bit. We make sure that we have a mix, and I'll explain. Emanda does something different, which is the mix between, there's the academic. And the academic is, and you'll always hear this, oh yeah, your multiples 3 to 5. Academically, we're just going to go with the conservative 3. Your company's worth this. So commonly the answer everywhere. It is never worth that. And I almost want to put my thing down and say straight away now, I can say it is never that. But the academic there for so many different reasons, including for the ATO, buy-sell agreements, for business partners exiting, for all the reasons you ever look at the equity structure, someone investing, all those reasons. And it's never that number. It's never done that way. Ourselves and most M&A teams and everyone else out there, they don't do this. Even the Big Four, they go out there, they'll tease out the market, they'll understand it. And really what they're looking at is a lot of the industry comparables. And they'll try to come back to that, to their client and to this company owner and say, well, we actually think you'll get this, which is inside of the multiples, you're probably higher over here in what we found. And I looked at that and went, all that data is now there. I'm going to automate the crap out of that. So Amanda does a mix of the academic maintainable earnings and everything else, and looks backwards and says, this is what this will come out to. But then there's always that multiple. So we also get you to fill in a whole bunch of, actually, you don't even need to anymore. So as of Monday, you can drag and drop. Literally now you can just throw all your documents at it.
You do have to expand our services because I only want you to be 90%, Pete.
No, sorry. But as of Monday, you can throw it all there. It finds all the metrics. That actually just goes, yep, I pulled them all out. And when I say all the metrics, each industry and what they're worth and all that sort of stuff, like I should always say a company's worth as much as someone's willing to pay for it. That's the default to begin with. But again, when you try to find the form of, well, we need to have a number though, and what's likely to happen, we don't look at any particular industry and go, okay, these are the ones for a construction company that actually matter when it comes to pricing the company. And so these will affect what we call the Amanda score. And that Amanda score is where you sit in industry and your strengths and weaknesses. And to be fair, when we look at the multiple, you probably will sit here because this is what the data says about your company. Now, then we give you a result. We now very happily show you how all that calculation is done, because we want it to be an education piece for the business owner. We want them to see why, so that they can go away and...
What are the areas we can improve on? Yeah,
that's right.
Exactly.
I need to fix it. But often I don't know what matters to that. Mm-hmm. So this very quickly goes, that mattered. Like, that's what you should have been targeting. This is what the conversation at the end. This is why we want to bring it forward. So as they look at it going, that's what I should be targeting, not I should have. Like, you need to get onto it. So it does that, and the price, but it's gone further. Like, because of the metric stuff, now we set targets. We're just about to release the pre-revenue valuations, which use Berkus method and all the other academic side, as well as what we see in market. So even if you're pre-rev and you're a startup, do all that part as well now. So that's really good for the companies coming in there. You're probably thinking,
I know Emma Jules were really happy with that.
There you go. It's like, wow, look at that. That's great. So that process gives them those numbers, and then some of the...
It actually gives them something to be excited about.
Yeah.
Rather than just saying, how much are we spending to build this? It's actually giving them something to be excited about and what they can do. And it actually gives them that purpose to pursue the things they need to pursue to be able to make sure they're hitting all the numbers that they want as well.
Yeah, exactly. Yeah. The thing is, like, what's just done now is we have all the targets in there, and we just want it to be a platform so as that whether you're at the beginning, the middle, at the end, whatever you're using it for, is to just be tracking and have something to keep looking back at, so as that when you get a chance to work on the business with your advisors, you're actually looking at something that's factual and backed by all the documents in the data room as well. So Amanda isn't just that valuation piece. As you go, the AI-powered data room is actually just completely having that library in a place. The latest feature, that's rolling out right now is boardroom is done. So because we have all your corporate documents and all of your notes, when you go into your board meetings, or you're meant to run an MTA, you literally click button, goes, great, here is a snapshot of all the documents at the point in time of the corporate compliance of your company. Here's where the company's measured and what it's worth. And it is open. You can see who touches it, who did that. The whole thing is set up in such a way for boardroom compliance. So as that you've got a historical view on an archive of the growth of the company through the time as well, which often, you've probably seen as well, when you get in there going, show me your board meeting, and they're like, and they go, was I meant to do that? And it's like, use the stat deck to say that you,
yeah. In your tax return on the stat deck, you'd actually stated, these notes.
Yes. Oh. Yeah. So there's, yeah. So what we'll keep doing, as you see from that, is that I'm just trying to continually build that platform for advisors, not trying to do it even for them, just to give the smart people in a room, because You can talk to all the academia. I'm like, we've done that bit. We've got all the numbers. Now the person looks at it going, yeah, not really. You know what I mean? It's like, I know you're saying that, but I reckon I can get them a 7 times multiple on it, not 5. Why? Because there's some stuff they've got. That'll be a trade sale, and that will be that someone's willing to pay above market rate because they need it.
Yeah.
Absolutely. But that's why you have the advisors popping on top of it going, that's great. We've got all the academic done. Let's keep working through.
But I think one of the keys to that is, we like to, when we look at selling our own businesses, for the purchaser to also give us a check for all the blood, sweat, and tears that we've gone through.
Yeah.
And they're not interested.
Yeah. Yeah.
It's like, well done. No. We're interested in the revenue, the product, whatever the case may be. When you then look at a business, one of the things we actually always say to our clients from the corporate advisory perspective is, let's say, for example, their business, the multiple could be anywhere from 3 to 8 times, depending on what industry they're in. So their widget business could be between 3 to 8 times. You go in there, you do the valuation, and they're thinking, well, all my blood, sweat, and tears, I definitely know. Everyone's an 8, so it's, everyone is an 8 without a doubt. But there's so many variables. Now, I'll give you one of our live examples is us. So we had a Chinese family just over a year ago do DD on us. Now, we walked away from the deal in the end, but they got KPMG involved.
Yeah.
Now, our data room is updated monthly. And it's we've got good steady cash flow. We never have any debtors at the end of every month. Everything is cleared. Where we don't have overdrafts. It's a pretty clean balance sheet. As I mentioned Boyanna earlier, she makes sure it's a very clean balance sheet. She's a shareholder in here too, so she likes a very clean balance sheet. But at the end of the day, when you actually looked at it, they came back asking for another, I think it was 523. And if Jamie's listening, he can verify that, data points. And it was just, and our chairman at the time, who was retired CEO of a listed company, and he was one of the founders of Hood Sweeney as well, which, got like 500 accountants, national firm, huge firm. And he's done a lot of M&A work. He's bought 28 companies into the company he was the CEO of and big shareholder of as well. And he turned around and he said to them, first of all, can I ask why, for us, on a deal this size, why is there 3 partners, 4 directors, and all these other people on this 1-hour call?
Yeah.
This is costing your client about 15 grand right now. So he said, their money, not ours, that's fine. But he said, the second part is, we're not BHP, guys. But the greatest part of all this, Pete, is when they tried to do the valuation on us in the last meeting we had with them, they said, we're struggling to do a valuation on you guys. And we said, why? Fairly standard, industry stuff. And they said, well, we can't find any data. Well, that might be because, tell me the companies you looked at. I'll count. And Matthew, our chairman, said, you do realise I was the CEO of Count.
Yeah.
So it's, you have, they're all listed companies. So there's over 30 transactions per month in our industry right now. And we gave you our valuation from the guy who is the leading valuer, who Matthew Rowe used 28 times to value the companies he purchased, who specializes in our industry. Did you go to him? Or so it was just like, we can't find the data because it's private. But this is something where they were paying $250,000 more, KPMG, to do DD on us. And it was just a case of, for me to turn around and say, no, and walk away from it.
Yeah.
And walk away from the deal, which I've done on numerous occasions, but it's just like, that is just ridiculous. But that's what you guys solve.
Well, that's the thing. I think it's and for which markets as well. So, for instance, that it's bigger companies in that space, in terms of numbers that you're talking about there, and there'll be a level of complexity. We don't shy away from saying there's a thing that we can support.
We were not $100 million deal, mate.
Yeah. Okay.
I didn't think KPMG needed to be involved, but it was his money.
Okay. Yeah. Fair enough. Yeah. But
all the extra work we had to do on behalf of KPMG, we actually sat down with him and said, "You're going to have to pay for our time in this," and he got a $49,000 bill from us for all the extra work that they made us do for no reason.
Yeah, it's true. Well, it's true. And it is the thing is, though, even if you think about some of the smaller companies that go through this, I think it's like you do then have to do all the legal bits. There's no question you can't get away from it. We'll still engage with accountants after the fact about going through and doing absolutely.
Yeah.
But the bigger thing being, It's all nice and organized. There is no waiting for someone to do the data room setup and is everything here? So much so, one of the things we're building in right now is you drop the RFQ. When there's an RFQ, you drop the RFQ, all your
Can you
documents.
explain to our listeners the RFQ, please?
Oh yeah.
Yeah.
Sorry, it's a request for like RFI, like a request for information.
Yep.
Request for data,
Yep.
whatever it might come out as.
Yeah.
They'll send this out, and when it gets to you, often what ends up happening is, please provide all these documents and answer these questions. And we kind of giggle about that now. I'm like, so in our system, it'll just, when you start your deal room for them, it says, okay, I found all the documents because they're already there, which have all the answers. So that's already DD'd against the documents that are there. Would you like to, and it already it puts all their questions in the normal question and answer section, says, would you like to reply with the answers? That's the system now. And that was a 6-week process. And I'm like, no, there you go. Followed by, when they have follow-up questions or lead, I'm like, great. When they ask for something new, it's like, well, we don't have that piece of it. Like, what are they asking for? It'll query all the documents because we've got that built in AI and say, well, no, if they had put this, this, and this together. So eventually where the platform will get to is, so we did, and we constructed this to answer it for them, which is us pulling apart the data. Would you like to send it on? It just means from a due diligence query and all the rest of it, something that would be there for 6 weeks. So outside of just the shape of the company, as soon as they get to the next part of the process, I just want to automate. So, and that is the part where I feel a little bit, I hope I don't upset a lot of people we do also partner with, even in the bigger space, but it is a part where they go, oh, that's part of 6 weeks of what we do. I'm like, I don't know why anymore. And it's not a cheap, that's not a cheap thing. Often for any client size, that starts at 20 to 30 grand.
Absolutely.
And I'm like, no, Amanda's, the app is at $200 a month.
Mm-hmm.
Like, you
That's
don't
right.
go, I'm like, we're
Yep.
not charging you more. And you only pay more if you process over, I think it's process over 1,000 documents at this point.
Yeah.
Otherwise, it's all fine.
So we'll go back. I go to that client who has the widget
Yeah.
company 3 to 8 times, and it's we go in there, we work with you, and we come back to them pretty quickly and say your company is currently valued at 2.5 times your EBIT. No, it's 8. Well, no, it's 2.5. But here's the reasons why. Here's the things that we're going to need to work on you, and this could be a 6 to 12 months of work here. So, for example, you're on debt repayments with the ATO. So you do have an EBIT, but you can't seem to manage cash flow to be able to just pay the tax when the tax is due. You have HR issues here. You have the wrong bums on the wrong seats. So you're sat here and you've spoken about this person who's on a $200,000 salary and they're in sales and they bring in $80,000 a year and they're still sitting here. You got the wrong bums in the wrong seats. We're going to have to fix your recruitment. We're going to have to do this. We're going to get all this done. And in the space of 12 months, all of a sudden, that company with the same revenue bet is higher because they actually got new people, better structures. They're actually monitoring things. They're managing things. There's no HR issues. They cleared tax debt. They've got cash. They're managing cash flow for tax, all the rest of it. And all of a sudden, they might now be a 5 to 6 times EBIT.
Yeah.
So then it's a case of, okay, how over the next 12 months, we're going to increase your top line and get your EBIT from 15% to 30%.
Yeah.
And then we go to market and sell.
Yeah.
So rather than you getting a check for $4 million or $3 million for all your blood, sweat, and tears, we can now be helping you and your family manage the lifelong $20 million. And that's what our job is to do.
Yeah, and that's why I think there's also almost like the perfect marriage in that. So and I know that you're setting
You
this
and I,
up.
Peter, are perfect. So the only problem is like 6 days later, our respective partners, or I don't have one, but our respective partners actually might be saying, "Where are they?" And we're still just there talking, and the whiteboard is full of stuff. So
I think my wife is actually quite used to that now. She's like, where was that conversation from? I'm like, I don't remember. Yeah. But it is good, and you are right. And I think the reason I say this to all of the points you're saying there is, and we see it more and more, is like obviously the company come to us. Oddly enough, what you do all see is I go, oh no, I'm happy to still go in and sell for that. And then the good people say to them, you shouldn't, like you're saying there, going, after all of this, why would you do that? And even it may end up coming to that, by the way. It might still end up being that they only get it 2.5 or 3 times at the end of the day. But what I say to them is, I go, but why would you throw away the opportunity for 6 months more of work? Actually, there's a big reason why I first started Emanda before even the product, which was the more boutique M&A stuff and all the rest of it. Because I met with a bunch of M&A people, and I said to them, I'm going to help people I'm going to go in, and when I find out that the businesses aren't worth what they want, I'm going to help them for the 6-12 month period, consult with them and get to there. And all of them said to me, nah, you just slap the sticker on the front and ship them out as fast as possible. Screw that. Yeah. And I went, now more so than ever, I want that to be the case. Yeah.
And that's why
Being
I
a
love
business owner.
partnering with you, because I am then helping that family manage intergenerational wealth rather than money to retire on.
And actually, that point as well, which I'll need to talk to you about my super movements in a second. That thing as well, right, is that what people also forget is after the company exits, they like, then what? I might even be something like, then you get looked after on the actual wealth that comes out of it, because that's a whole other game when you get to there as well, and you don't understand the capital gains expenses and how do you offset it all. So we saw all that, but it's more so to that is I think if someone asked me on one of the things I was on, tell us what Tractor Ventures asked me, admit to something, in the business that people wouldn't often know about. I'm like, I've started all my companies on the back of revenge. And she goes, that's great. She goes, why would you admit? I'm like, because I'm that sort of person. And Amanda started from these people that I talk to say, nah, put the sticker on them, sell them, or don't touch them because we're going to get your fee. And I went, from helping them, but you know what I mean? So yeah, it definitely came from there. And that's why it's always really good. And you're the same. That's what I've noticed straight away. It's like working with you, find people in the industry going, I actually want to help them.
Yeah.
But I'm not trying to take, I would like you to succeed.
Absolutely.
Seems to be this novel thing out there. I'm like, no, you really want to help them succeed. So yeah.
But there's you spoke about that, and I've always had this adage as well. Is it's I like to live in the present and look forward to the future. But I'm getting to the age where I'm not actually dreaming about the future as much, and purely based on the fact of I'm 56, so I've only got 49 years left.
Yeah.
So it's but it's just like I'm not wishing my life away. So on that basis. And I'm also a person, the idea of not waking up on a Monday morning with something to do just kills me. So walking around my estate that I don't have yet, picking my olives is not my dream. Doing that on the weekend is, but it's not my dream. But the greatest form of revenge is success.
Yeah, that's right. Yeah.
It's simple as that.
Yeah, it's good. My wife always reminds me of it. I actually also try to say to my wife, like, I'm 43 going.
It's actually something came out of Viktor Frankl.
Oh, really?
Yeah, Man's Search for Meaning. The greatest form of revenge is success, but from that perspective, from his perspective, coming out of Auschwitz, but success was self-reliance, that you didn't ever have to rely on anyone from a financial perspective or for your children's. So education, succeed, financial success, you don't have to rely on anyone but yourselves and the family.
Yeah.
And the community.
Yeah, nice. Yeah. It's right. Sorry, just back to what you said before. My wife, when she said I got 43 going on 44, and I'm like, because you do. Sorry, anyone who lies about in business goes, everything always goes swimmingly well. I'm like, mate, it's just don't say it to another business owner. By the way, that's the other part. It's like when you're a parent and someone said, my kid sleeps through the night. I'm like, gonna murder anyway. Yeah. Like, I really want to hear that when they've been yelling at me. Anyway, oh, good, that's great. But I said to her, I'm like, you know what? I think even only 3 weeks ago, I'm like, ready to retire. And she goes, Matt, sorry. She goes, as much as I'd love you to be the person who spends more time and doesn't do this work, she goes, that's not you. She goes,
like, you're ready just to have a weekend off.
That's what she actually said to me. She goes,
come Monday, you're ready, twiddling your thumbs.
Yeah,
and
she goes, you're ready for the Christmas shutdown. I'm like, I am ready for a Christmas shutdown.
Yeah.
I'm like, I need it. Yeah.
Okay, but on that then, it's because you are a successful person, and I say person, I'm not just talking business owner here, just as a person. You're a guy who I greatly admire. But the fact is too is that one of the things I've realised this year, because I went through personal change and business change, all for the greatest success, and very amicable with the people who I've made those changes with, which I'm more pleased about than anything, to be brutally honest. But actually having something to look forward to, and from my perspective, as a holiday. So this year I went to Poland, where my grandmother was born in Krakow, and actually did a tour of Poland. First family member from certainly, my immediate family, know too much about the extended family, to actually go and do that. So I did that, and then I went to Berlin. Now, I've been to Germany 12 times, never been to Berlin. Jeez, I'll tell you what, it's a pretty full-on place. It is very, very full on. Very different to Poland, but it was very, very full on. But absolutely loved the trip. First time ever in my life I took a solo holiday. Now, I've been overseas numerous times for work.
Yeah.
By myself.
Yeah.
But always meeting up with people.
Yeah.
This is the first time where if I wanted to speak to somebody, I was forced to go up and introduce myself to them and actually speak to them.
Yeah.
So it was old school, like what we used to do in nightclubs.
Yeah.
So,
It's like, oh,
but
that's
yeah, but it was you actually forced. So in Poland, I was on a tour, so got to meet 30 retirees from, well, not all of them, but so 25 retirees from the US, and the others weren't. So that was my group. So it's that we clung to. But when you actually looked at that, I really look forward to that trip. And I look forward to being out of my comfort zone because I've always operated outside my comfort zone. That's what we do. But that was something that was fantastic. So you're ready for the Christmas shutdown.
Yeah. Just even said, the only thing I ever did, I only did it twice, was extend a trip for 2 or 3 days and said to my wife, I'm going somewhere I hadn't been for. I'm going to go see this.
That's something I do too.
Yeah.
All my trips overseas now, besides work, places I haven't been to before, which are
Yeah.
holiday trips.
Yeah, which are good. But I did one, which was Austin, Texas. I love Austin, Texas. But I ended
You're
up,
like me.
but I didn't tell my wife.
Music, meat,
Yeah,
and comedy clubs.
it just kills it.
We're in heaven.
Yeah, exactly.
And it's the tech hub.
Yeah, and a tech hub as well. But my wife actually said to me, though, she didn't know that I'd gone. She knew I was there earlier, and I was going to go see a few things. She didn't know that what I decided to do, because I'm like, I don't want to stay in a hotel or restaurant. I'm going to try out the Airbnb thing, but with a host. Never done that before. Anyway, I rock up to this house. Now remember, it's in her mind, it's Texas. Yeah. So she's like gunslinging. So I roll up to the house I'm meant to be at, and there's a crime scene investigation unit at the front. And I'm like,
And you hadn't even
in my head,
arrived.
I've got, if my wife, anyway. So, and I jump out the car. She knows the story now. And I jump out she hated me for it when she found out, but I jumped out the car and I looked, I'm like, oh, all of a sudden, police officer, like a lady, opens the door, looks at me. She goes, oh, okay, no, this is the right house. This is, come in. I'm like, I'm looking at the car. She goes, it's okay. And I go in and she goes, sorry, I'm just clocking off. I'm the one who's the host, and I'm a crime scene investigator, police force sergeant thing. I'm like, this is interesting. Yeah. Anyway, we ended up. Her husband
Did a Who song come on at that stage?
No.
A bit of Barbara O'Reilly coming out there, or
her husband turns out to be a bass player and also the plumber for all the pubs through Austin, Texas. So that night, he drags me out to 3 a.m. to every pub you can imagine of where all the bands I ever loved all came from. And I'm like, so we get home smashed drunk. Like,
Bella, make sure we get the name of these host group, because that's where I'm going when I'm in Austin next
year. It's so good. They're so lovely.
Staying with them.
I still write to them, almost like pen pals. But anyway, and she, and then in the morning, she's like, oh, a bit rough, guys. And so she's cooking us eggs. I'm like, I'm loving this experience. She goes, hey, you were talking about it in your drunk list last night. I go, was it? She goes, yeah. Do you want to come check out the crime scene unit thing in the police? All of a sudden, I'm in the back of a crime scene investigation unit rolling up into a police thing in the middle of Texas. She then showed me that whole thing. The souvenir I took home from that anyway was fingerprint tape. Because she showed me how that all worked. Yeah.
Yeah.
So, but the other part was she walked me in and she showed me the paper bags in these rooms that had these numbers in the case area. I'm like, 7,850 on the door. I go, what's that? She goes, oh, that's the crime. So when someone calls not 000, what is it? They're 911. That's the time, the number of the 911 call is in that
timestamp.
Yeah, it's not a timestamp. It's a number of calls, and this is the number blah because that's how they record. I go, that many per month? She goes, no, on a day. And I went, how? She goes, there are 14,000 911 calls in Austin, Texas every day. And the bags were body parts in a paper bag because of the blood seepage, because plastic bag would swelt and erect the evidence. I go, I'm okay to go now because I'm not good with blood. Yeah, I'm like, this has been amazing. We need to go.
How can I build AI for criminals to be able to get around all these?
All I could think to myself was, growing up in St Albans, there was one of two ways I was going to end up in the back of a crime scene investigation unit in a police, and then I went the right way.
You did go. You did go the right way.
I went the right way.
But it also suits your personality.
Oh yeah, so
I'm definitely staying with those hosts.
They were. Then we went out on their boat in the river. Anyway, they were quite lovely people. Really good.
Yeah, it's definitely. But I think, though, you did hit on something there. As entrepreneurs and business owners, we do have a tendency to just work. We're always on.
Yeah.
We can be out in a cafe at a restaurant and hear someone say something. It's just like, what a great idea. So you're just always on. It's just in our DNA. You're working out in the morning. You think of something. It's on. So it's. But I think having something to look forward to. So I got told in here that I was ghosted whilst I was overseas, because I would I had the order, but it's still okay. I've got these emails. I'll just forward and it's just like they were on top of it all. But it was just like I was ghosted, and so it should have been. This was a trip for me by myself.
Yeah.
So it's But I think going and doing those things and having something to look forward to is just really vitally important because it's what freshens us up to be that person that's always on.
Yeah.
And if you've got something to look forward to, you have less, I think, of those 3 a.m. wake ups where you're just waking up in a panic for something that you forgot to do.
That's why I'm really lucky with my wife does that for me. So Carly will literally, I'll say to her, "Why are we going on this trip?" And then I used to complain because, like we said, it takes you away from the work, and I'm really busy. And then I learned not to complain. I'm like, I'm not going to do it. I'm so lucky like having someone drag you out. It's so easy to just be buried in work 18 hours a day. Very easy to do that. Who's the guy? Sorry, the CEO of NVIDIA. They asked him, like, oh, he goes, oh, yeah. He goes, I work. He goes, I take a break. He goes, and while I'm taking a break, I work. Like, he's like, you don't stop working. Like, there is no stop working.
Brain's always going.
Yeah. Yeah.
But if you're refreshed physically and mentally,
Yeah.
of course your brain's going to be going more and looking for opportunities and seeing things that actually come with it because you're actually refreshed.
Yeah.
You're not overwhelmed. You're actually physically and mentally feeling great. You've tried new foods, some that might not have agreed with you.
That's what I was going to say. That's what happens to me.
Yeah, that's right. So, but I think that's one of the key drivers of actually being an entrepreneur, and you are one of the more successful ones. And I'm glad Carly's actually pulls you into line every so often as well.
She definitely does. Yeah,
as I know your children do as well,
Yeah.
which is also really
Exactly.
good. So, Pete, we are going to be working hand in hand with you, as you know. So I'm a long-term guy, mate. So
Yeah.
we're getting married, we're done.
I was gonna say, looking forward to it.
I'm going to finish on some rapid-fire questions, if that's okay.
Yeah,
So questions without notice. Coffee or tea?
Coffee.
Is that okay?
It was good. Very good, actually.
Yeah,
Thank you.
thank you. That's good to know. I did complain about the coffee beans the Boyana bought. I thought, things are going okay. I think we can go back to Sonali if that's okay. So do the coffee beans. First business book you'd recommend?
So it depends on the stage, and I won't just do it depends. I'm a big advocate of scaling up. So Gazelle methodology, it's heart and soul to almost everything we do across our businesses now.
It is.
So yeah, that's
absolutely.
it's a good one to read. Just to understand the mechanics of I need to actually scale this thing.
Yeah, great book actually. Worst advice you ever got and followed?
The accounting advice that I got of that company that went under was, don't worry, just set it at this rate, you'll be fine. When an accountant says, don't worry, just do this, you'll be fine. It's like when the government, anyway, it's like when they're like, we're here to help. Yeah. When the government says we're here to help, question that. So that's the advice of it will be fine. And even that term, it's a clear fire thing. It won't be fine.
Mm-hmm.
Go check that out.
There's a few sayings that like that. If someone says, so there's some parts of life where it's just like getting a flat tire, son, is not that bad. It'll be fine. Text it. So there's different scales of A to Z, but but I like one which I do say to clients now because there's a lot of rubbish private credit out there in the markets at the moment. Where people saying 6 months, I'll give you 21% and this $500,000 that you'll never see again. They forget that fine print part, so it's at the bottom. But if it's too good to be true, it's too good to be true.
It's so true. Yeah, that is.
And it's not usually too good to be true. If it's too good to be true, it's too good to be true.
Yeah. Yeah.
And that's one thing that
I should have got in early.
So, that's something. No, it's I could not work out how to get this damn wallet set up, and so I walked away at $250 a coin. I bought in a hell of a lot higher, so but I bought in through an ETF. Yeah, and that is not advice to my clients. So just clarifying that there is a disclaimer at the end of this podcast. This is not financial advice. So it's so I'll just put that one out there just in case our compliance team are listening. Favorite micro habit that keeps you productive? Probably changed over the last 3 to 4 months.
Yeah, I was going to say, I think trying to get I don't know if it's a micro habit, trying to make sure that you get some level of exercise for me means you get that dopamine hit. And for me, it's a weird saying. I say to people, like, I feel like at the very least I've completed that today. And often in a business where you're at the grind for months on something, that little thing is what actually keeps you. Just completing a thing keeps you going.
Yeah, for me, the 20 minutes of breath work, 20 minutes of meditation, an hour and a half of working out is just my medicine. I have a great day. I'm not a really good person. I haven't missed meditation now for a day for over 10 years. I think 3,824
Yeah.
as of this morning. And sometimes that meditation is only 10 minutes, but I still won't miss that.
That-
Sometimes it's very deep. Sometimes it's just like my mind's going 100 miles an hour.
The other one I'll just add into it just quickly is it's actually more on the HR side, more the cultural side, is I actually just thank someone or be grateful just very quickly. It's a habit I've now been doing over the last 10 years to say something to either a business partner or one of the colleagues or staff member is just say thank you. Because again, even as business, it's really easy to let that go by for a long time that you just presume that they know that you like what they're doing. I make it a habit now. That's the little habit daily to someone to be like, I really appreciate what you do.
It is a magnificent micro habit.
Yeah, it's hard to just really
Gratitude is a wonderful thing.
It's free.
Yeah, that's right. Exactly right. So
Yeah.
it's and the thing is too is I know when that comes from you, and I know if I pay someone a compliment, it's genuine.
Yeah, that's right.
There's no other intention involved, something like that. It is actually genuine. So it's and being a Gen Xer, I try not to Gen X that compliment. You can't say that nowadays. Yeah, so but in saying that, I've always all my life opened a car door for a female getting into my car, whether a partner or a friend
I've
or
done the same thing.
so I'm not an Uber driver.
Yeah,
It's but I've always done that. But there was a young colleague here who, she's a wonderful woman. She's no longer with us, but she's a wonderful young woman. I did that for her, and she got in the car, and I did turn around to her because she's a lot younger, still in her 20s, and I said, I hope you weren't offended by me doing that. I just need to let you know I do that for everyone. She goes, no, it was actually quite nice. But I really felt sad that I actually had to raise that. And she knows me well enough not to be offended by me opening a car door. But I actually felt a little bit sad because I do know that there are some people out there that will be offended that you let a woman in a lift first or something like that. So yeah, so it's but if I pay a compliment, it's always genuine. I know you're the same.
Yeah, I was going to say same.
One thing you'll tell your 22-year-old self that you now know.
It's weird. You'll eventually get there.
Yeah.
That's the thing. I think imposter syndrome, you always put on this brave face and everything else you do. And back then, more than ever, you're like, I'm just going to make this up. And you're always looking at it going, I'm just stuffing this. I'm not going to, look at all these people above me. How do they know this person? How did this happen? I was always that. I'm like, I should be there right now. I'm always the person who's run down the road, up the tree and going, I should be there. Ever look back at it. But then again, if I probably told myself that, probably wouldn't have tried as hard to get there.
You wouldn't have fallen out of so many trees.
Yeah, I would just fall out of the tree.
Learn to be the person you are today as a result. So, the one technology tool that you're currently most excited about besides Emanda, it's because I'm very excited about that wonderful bit of technology and tool. So, besides that,
Interesting one. There's all the LLMs that are out there. I think agents in general across them is exciting. What people are doing with them, where they'll end up going, how they're communicating with each other. And I say that as in probably the most interesting one that happened in the last week. We practice automating everything we possibly can, as you mentioned. Sure, everyone should be trying to do the same thing, but really moving into that new way of working and modern way of working. And I was on a meeting and Emily turned around to me and because I'd opened up one of the sheets that we're working in. She goes, oh, no, stay out of that one. Don't go through that tab. Why? What's in there? She goes, no, the agent's in there. It's doing all this work. So leave it alone. Just wait till they're finished and come back. I'm like, okay, I'll close the document until the 8. So like a human, I'm like, oh, just wait till they're finished working. Then okay. She goes, yeah, don't screw with it. I'm like, and it was such an interesting feeling. You're like, I'll wait for the agent to finish then, will I? And there's a bit of it was like, I was going to update that. She goes, yeah, no, we don't need you for that anymore.
And the thing is you want to automate yourself out of a job.
Yeah, that's exactly happened. But the agents, and then I was quite proud of Emily doing it. I'm like, how much are you doing this across the board? She goes, everywhere. And it's because I've recently been whinging her that she needs to actually be doing more documentation on processes. She goes, or just automate them. I'm like, let's have this battle.
Wonderful battle. Wonderful battle to lose.
Yeah, absolutely. I'm like, yeah, good one.
A business myth you'd like to bust?
Yeah, there are so many. I don't know what to pick from. They all succeed. Everyone just presumes I start a business and I win. I'll build this app, I'm done. And it's just not true. It comes from a lot of hard work. People don't tell you that. I think it's really important people know that not to be dissuaded away from it, because if you've got a good support mechanism, you'll probably win, but they don't all win. Of the 6 of mine, 2 failed. Yeah, one very badly. And then, pick yourself up and go again. Right? I think the biggest one is not everything succeeds. And I think if people understood that and myth busted that, they'd go, well, how do I make it succeed? And it is a bit of a slight push into the Emanda stuff. But it's like keep your eye on what matters to the value of that business being successful, because they don't all go well.
I had the honor of being asked to present on the final day of the entrepreneurship subject at Sydney University for their business management course in commerce. There was a bunch of wide-eyed students in that room, and so I decided to scare them all by turning up in my suit and tie, as you know I usually wear. So
Yeah, yeah.
it's the first question I asked them is, hands up anyone who would like to be as successful as Elon Musk or Jeff Bezos. And I would suggest everyone's hand went up. Keep your hand raised if you are willing to work 20 hours a day, 7 days a week for at least 6 to 7 years. And there was probably about 7 or 8 people's hands that stayed up.
Yeah.
I said, you've at least got a shot.
Yeah.
It's,
And it's bad, and people don't like saying it because they're like, no, balance. I'm not looking at that going, no, balance. Sorry.
Yeah.
Sorry.
Yeah.
I should be careful. Like, everyone does need that balance. We just talked before about the holiday and everything else.
Oh, when I sleep deeply.
Mainly because you're knocked up and you're like knocked out and have no energy.
No, I can assure you I was born a male genetically and I cannot get knocked up.
I knew as soon as I said it, yeah.
so you knew you'd get a comment back from me.
Of course.
But it was interesting, just that perspective that they actually had. So it's, well, you're here because you want to be entrepreneurs. But if you're not willing to actually go down to the car park and see 10 cars of all your employees and you're struggling to pay the rent and they're all going home at night and got their mortgages and their family and they're leaving and things like that, that's the world of being an entrepreneur. How many times if you've ever read the book Shoe Dog by Phil Knight, great book, the founder of Nike. And that book is purely about all the parts, everything Nike from day one, all the way through to have finally started to succeed. So it's about all their failures.
Yeah, right. Yeah.
And everyone looks at Phil Knight as the man worth $38 billion today and the founder of Nike, etc. No one knows that, well, not everyone, people do know, but the fact that every single month he was bankrupt. In actual fact, if we had the ATO going in there, you don't have enough cash to survive the next day.
Yeah,
you owe too much money. So, and so people look at the ultimate success. They don't look at the 10 years all the way, the overnight success was in their case about 20 years of, backbreaking, damn hard work. So I totally agree with you.
Yep.
Last question, Pete. In your mind, success is?
It's a good one, actually. I don't know. Because my wife says to me all the time, she's like, "Oh, so when do you have enough money?" Funny enough, and I don't think it's about money. Success for me is now is actually, and it sounds a little bit cliche, but is actually helping others succeed. That's now it for me. Like, I'm immensely passionate about that and seeing people actually win, because I feel like if I've only got so much time myself to win, so I think that's the thing for me now is success will be seeing that. And in a comical way, I said to my wife and written on my tombstone and never forgetting that I did at one point as a consultant sell a $21 million deal to Virgin. It is my largest because I'm at heart a salesperson. And she said, they're not going to write that on your tombstone. I'm like, I want you to have that written on my tombstone.
But when you die at 115, that $21 million will only be the equivalent of about $1 million at that
will
stage.
Virgin go the way of Ansett one? Anyway, yeah.
Yeah, exactly right. So, Pete, my friend, thank you for coming in today. It's great you being here. Thank you.
Thanks so much, Tony.
The Kofkin Bond podcast is a product from Kofkin Bond Co, which we are an authorized representative of Count Financial. All information in this podcast is for education and entertainment purposes only. It is not intended as a substitute for professional, finance, legal, or tax advice. The hosts of the Kofkin Bond podcast are not aware of your personal financial circumstances. Before making any financial decision, you should read the product disclosure statement and, if necessary, consult a licensed financial professional. Do not take financial advice from the podcast. For more information, head to the disclaimer page on the Kofkin Bond website, or you can find resources on the ASIC website and find a registered financial professional near you. In the spirit of reconciliation, Kofkin Bond Co. and the hosts of the Kofkin Bond podcast acknowledge the traditional custodians of the country throughout Australia and their connections to land, sea, and community. We pay our respects to their elders, past, present, and extend that respect to all Aboriginal and Torres Strait Islander people today.